it's always, it's easy to be an investor to think, all right, well, what is the market going to do? Is it going to go up or is it going to go down? And, how do I invest through all of this? And again, it's so important to stay within your overall risk tolerance because the markets turn so quickly.
And welcome into the program. This is your game plan for retirement with Northwestern Ohio's resource for a common sense approach to planning with your money for your finance and retirement future. He is Chris McIntire, president and founder of McIntire Retirement Services. Always a resource here on the program and your resource, Northwestern Ohio. If you have any questions or concerns about your money or your investments or your planning, pick up the phone and give McIntire Retirement Services a call, 419-332-0532. And kicking off the program, here's Chris with his tip of the week.
Hey, everybody, good to be with you. Quick tip of the week here. We're, late in the year of 2025. Roth IRA conversions. This is a good time to see if these things make sense for you, depending on the tax bracket that you're in. Under the big, beautiful bill, we got an increase in deductions for married couples and people over the age of 65. Where it may be advantageous to take a little bit extra from the IRA and convert it into a Roth IRA and have that money be tax-free down the road. So tip of the week there. And obviously you want to talk to your CPA, your investment advisor, to see does this make sense in your case? And we do a lot of that at this time of year, Peter.
We always appreciate the tips, Chris. And again, if you've got questions about your money, your investing strategies, your finance, your retirement planning, pick up the phone and give a call. Have a conversation with Chris and the team there at McIntire Retirement Services and get your game plan for retirement put together. 419-332-0532. 419-332-0532. So, Chris, we are in Halloween season and an interesting parallel here. You have a few stories that illustrate how Halloween is actually one of the best analogies for retirement. How is that?
Well, we'll keep it pretty simple and pretty lighthearted here today, but what happens in Halloween is you go out and you try to get as much candy as you possibly can, and then you have to allocate that to make it last as long as you can. That kind of sounds like investing in a 401k, doesn't it, Peter?
Right, it does. Yeah, absolutely. And then on the other side of that, Chris, I'm sitting in my house with my bucket of candy and I'm trying to dish out just enough to make it last for exactly however many trick-or-treaters I might have. I've got a finite resource and an unknown amount of visitors, costumed visitors that are going to show up. And so I don't want to be too liberal at the beginning and run out early, and I don't want to be too conservative and then left with a big bowl of candy at the end of the night that, of course, my waistline gets punished over the next several weeks.
Yep, and inevitably there's some volatility. All of a sudden, a gang of 25 shows up, and somebody might soap your windows or something like we used to do back in the day as well. And, and remember, when you're out there gathering your candy, you don't want everything to be a Reese's cup, right? You want to diversify. You might want a couple of lollipops and some lifesavers and different types of candy so that you don't have all your eggs in one basket, so to speak.
Yeah. And another kind of analogy here, Chris, I have been shopping early for candy over the last several years because if you go late, it's all of the stuff nobody wants that's left over, right? It's just the candy corn and the Dum Dum lollipops that are left there on the bare shelves right at the end. So I go early so I can get the good stuff, the Kit Kats, the Reese's, the Snickers, all of the full size bars. And then I stash it away in my house. And apparently I need to find a better hiding spot because the gremlins seem to find my stash and eat it early. I open up the cabinet thinking I'm prepared on Halloween night and my stash has been raided. So for our retirement planning analogy, this might be taxes or market volatility or inflation or healthcare costs. You think you have enough, you think it's in the right spot, and then surprise, it's gone when you need it.
Yeah, and you have a son, I think, is probably in that 14 to 16-year old range, and he may have a custodial fee that you're paying that you didn't know about as well. So, like you said, fees and taxes and volatility certainly come into play. And I think as we're entering this, the third, fourth quarter of the year right now, September, October are historically volatile months. And, we are certainly seeing some of that. People are talking about, is the market too high? Is there a correction due for, especially the tech sector with all the artificial intelligence or the AI run up that it has had, and gold on the other side of it, has shot up significantly, about 60% this year. We all know that's unsustainable.
Yeah.
And, when do people pull money back from that? So this is our historically volatile time for the year. And then the market resets itself. And as we end it, normally as we end the year, like December, November, or I'm sorry, December and January, we typically have better months,
Yeah.
historically speaking.
Well, and then add on top of that, compounding, we've got the government shutdown. So we're not getting the normal numbers and indicators that we would otherwise be getting. So really, a lot of the market movement has been based only on the news that's available through earnings reports and a general sense of the economy, like the corporations that are announcing their projections and their earnings for what has happened and their look forward are kind of guiding the market right now. We're kind of running blind a little bit, Chris.
Yeah, we really are. And, right now, we're watching the earnings seasons. Netflix had disappointing earnings. Some of the other companies like the toy companies, Mattel and Hasbro, was just out that they had some disappointing earnings. And that would have been related to tariffs, right? Because, let's be honest, those aren't the Saks Fifth Avenue of the toy department. That's the stuff that comes in from China. And, and I was just watching that before we were recording the show here today, as a matter of fact, Peter, that some of the earnings have been disappointing, and so that'll be reflective of their stock prices, adding to more volatility again as we work our way through the third quarter into the fourth quarter, and see, are the companies delivering the results that can continue to fuel this bull market that we've been on. And, it's always, it's easy to be an investor to think, all right, well, what is the market going to do? Is it going to go up or is it going to go down? And, how do I invest through all of this? And again, it's so important to stay within your overall risk tolerance because the markets turn so quickly one way and then the other. And the best days in the stock market typically come after some of the worst days. You sure as heck don't want to miss the best days.
Yeah, and some of the best years right after some of the worst years and some of the best months. The market is resilient, right? It's not that it's bulletproof. It certainly has had some downtimes and some of them rather significant. But over time, the market has not only always come back, it's always surpassed previous highs. But you're right, Chris, we've had a significant run up here. And you mentioned gold. Gold had a fantastic year, but I know recently it also had its worst single day in like over a decade. So everything has to cool down and
Yeah.
and blow off some steam every once in a while. Correct, right?
Yeah, absolutely. And nuclear energy and whatnot, that's another one of those, that's had, up nearly 100%. Some of the ETFs and the funds around nuclear energy that may end up fueling some of the AI boom. But some of those companies are startups. They don't make any profits or anything right now. So, as they had a significant run up, now there's been some pullback on that as well. So, as this artificial intelligence industry, becomes its own economy, if you will. Not everybody will make it to the other side of this, and somewhat reminiscent of, the speculation back in the late 1990s, that led to the tech fallout in 2000, 2001, 2002, where we had a pretty significant recession, a terrorist attack, but again, a big run up in the tech sector. And what did it take the NASDAQ? 13 years or so to get back to where it had been from the peak in 1999 or early 2000. I mean, you're talking, almost a lost decade. For those that are listening to the show today, they were still investing most likely,
Right.
right? So didn't pay much attention to it because they were much younger and putting money into their 401ks. Now they're on the other side of this saying, hey, do I really need to does it make sense to have some money that's a little bit safer versus riskier as I'm working my way through retirement so I don't get hammered by a significant pullback or a recessionary type correction?
Yeah, and that compounds again on our Halloween analogy. When you've got a finite amount of resources and an unknown amount of time to make them last, and then we see things like a market correction. Chris, retiring in the year 1999, 2000 certainly probably was nerve-wracking, a lot of anxiety as we saw markets correct. Like you said, most of the listeners here probably during that time were still investing in their working career aggressively, but the story is very different the day after you retire. And that's why, ladies and gentlemen, you need a plan, not just an investment account, not just a 401k or IRAs, but a plan that looks at income generation, investment management, minimizing taxes, tax management, healthcare, and legacy. And that's what the game plan for retirement is all about, helping you address all of the pillars, all of the worlds that go into a comprehensive plan. And most listeners of this program, Chris, I imagine have done a good job of working and earning and saving and investing, but don't have all of the pieces to the picture. And in fact, may have set certain things up that work against them in retirement. We try to get that into alignment with that game plan for retirement. So, ladies and gentlemen, if you would like your personalized plan, your specific goals, long-term vision, diversified strategies, that is the game plan for retirement, a written plan for you. No cost, no obligation, a courtesy service that Chris McIntire offers and extends to listeners of this program. Pick up the phone, give a call, 419 332 0532 419 332 0532 419 332 0532. Chris, I know that these are the kind of lessons that participants and attendees at your retirement today classes often find valuable, things that we're rethinking and learning and making sure that we're retiring right.
Yeah, you're exactly right. Yeah, we call it Prepare for Retirement, the Prepare course there, a 501c3 that we teach at a couple of local colleges several times throughout the year. We're wrapping up on that here for 2025, and I think Peter will run some spots for 2026 when we get those dates and it's set in stone. But good educational events for folks to pay attention to. They get to ask questions in an open forum. And it's just a nice way to give back to the community as well, and to help people make good decisions. And even if they're working with somebody else, it's just nice to help people. As we kind of enter the twilights of our career. For a lot of us well-seasoned advisors, it's about giving back as much as anything.
Well, again, if you would like to find out when those courses are upcoming or in your area at one of the local college locations, pick up the phone, give McIntire Retirement Services a call, 419 332 0532. 419 332 0532. Chris, sticking with kind of a holiday or a seasonal theme, analogy rather, we are in the fall season. Fall certainly represents change. And I think right now we are expecting some change in the interest rate environment. We've already seen that begin to happen, but we are expecting rates like the season to continue falling.
Yeah, we certainly are anticipating that as the job market is softening a bit out there. Inflation's still that 800-pound elephant sitting in the room here. Is it under control enough where they can make some significant rate increases? Cheapen up the supply of money or borrowing money, open up the housing market where people can start to look for that second, not that second home, but they want to get into that, the next home in their life phase, right? We did the same thing back in 2018. And that would open up the economy probably pretty good as well, too, because you buy a new home, you're going to buy some new furnishings for it, maybe do some remodeling, that type of thing. So, especially for the durable goods, things that last longer than 3 years, washers, dryers, appliances, and whatnot. So, I am very hopeful that we do get a couple more rate cuts. And, you and I, we become well seasoned, at a mortgage cost at 3% or less. And that's not really historically where it has always fallen. And I think if we can get back into that 5% range, you'll see a lot of activity on the real estate front.
Chris, lower interest rates, good for borrowers, not so good for conservative investors looking for some growth, income generation, interest yield from less risky investments. So that may be something to keep in mind, especially when we are looking to find the kind of protect the principal, live off the interest type approach, or the best income cash flow rates in retirement. Is that if rates do continue to fall, which we strongly expect, and the market is kind of already pricing in, that may hurt for those kind of efforts moving forward.
Yeah, yeah. From the investor side, you're absolutely right. CD rates coming down, pension payouts coming down, income generation gets a little more challenging. On the investor side, for, putting money in equity investments and whatnot, lowering interest rates is good for bonds that are already in circulation. It makes them worth more money. You would pay a premium to get a higher rate. So that side can be okay. There's over $7 trillion in money market accounts. So if rates come down low enough, all right, some of that money is going to come back into more of a riskier position, if you will, dividend stocks, that type of thing, things that are generating, some income to keep up with the pace of inflation. So there's a lot of, we call that powder sitting on the sideline, or fuel that could continue to boom this economy. And then if you think of if you're a smaller business, right, lower interest rates mean you can invest more money in your company for new equipment and whatnot versus making interest payments. So, two different, it's a double-edged sword, right? Yep.
Yep.
From the conservative saver side to, the business looking to borrow money.
It seems like we are in a bit of an interesting time, Chris, because everything always traditionally is sort of cyclical. But over the last several years, call it 4 or 5 years or so, interest rates have been high, stock markets have been high, gold has been high, and all of these things don't typically correspond at the same time in history. So are we in an untraditional kind of environment here where rates are expected to continue to decline, but simultaneously maybe we're in a little bit of a bubble in the market? Not that we're expecting any kind of downfall, but if it happened at the same time rates were going down, that would not be the traditional kind of correlation, right?
Yeah, and that's a good way to summarize it there, Peter. How are all these things correlated? And at different times in an economic cycle, weird things happen. 2022, they raised interest rates 11 times. Worst year almost in history for those of us that are, not 120 years old, for the bond market performance. Okay. Same for the stock market, down somewhere in that 20-25% range, depending on what index you choose to measure. And normally when stocks go down, bonds help buoy that loss. 2022 was an anomaly. It's just what happened in a short amount of time. And then where we're at right now, is it possible the stock market's a little overheated and due for a pullback at the same time that they cut interest rates, which usually helps the stock market prices? So, it will even itself out. It'll become a little less uncorrelated, if you will, as the economic cycle works its way through. So again, just like we said at the beginning of the show, that's why you have to have some patience through all of this. I mean, the stock market can be very rewarding. It can also be very frustrating as well. And, you and I were at our conference with Brookstone Capital Management out in Dallas, Texas, not too terribly long ago. And, I made a note from one of the speakers, and it said that, 85% of the time the stock market is in growth phase. So, you can be overly conservative because you're playing on something that only happens 15% of the time versus what happens 85% of the time. So finding that true risk tolerance, and you always find your real risk tolerance when the stock market's coming down, not when it's going up. Because when it's going up, everybody wants to be the next, wants to hang in there, be the next Warren Buffett, or, well, I don't want to make any changes yet until, the market falls by 10%. I said, but we're talking about relocating that while you've got it in your hands. Yesterday we had a client significant run up on one of their AI positions, and we carved off about 50% of that yesterday in a meeting.
Yeah, yeah. But everybody can look and appear and feel like a genius taking advantage of that rising tide. But Warren Buffett, you referenced, I think, had a famous saying, it's not until the tide goes out that you see who's swimming without their bathing suits on. So,
Well, yeah, that and a broken clock is correct twice a day.
mhm. uh, Again, we're talking with Chris McIntire. The important part of this, the takeaway, ladies and gentlemen, is that you have a plan for regardless of market conditions, up, down, sideways markets, your specific phase of life, your expectations for returns and risk, your time horizon, your need for income. Those need to be reflected in your plan, not just a generic investment account, not just focusing on rate of return, while important, certainly, while important, not the only thing that is going to dictate and determine your success. You need a goal-oriented plan with a long-term time horizon, segmented out for shorter-term goals with diversified strategies to help you achieve and accomplish those things. And that's exactly what Chris McIntire and his team at McIntire Retirement Services have put together for so many proactive planners and savers and investors throughout Northwestern Ohio. And if you would like to get your plan put together, your game plan for retirement, pick up the phone and take advantage of the opportunity. The offer is there on the table. No cost, no obligation. It is a courtesy review and planning session, a conversation to get things started, get to know you, get to know Chris and the team there, and see what they can do, help you accomplish through a plan. The number to call, 419-332-0532, 419-332-0532. Okay, so Chris, we are in fall, which means as quick as it seems to happen, the end of the year is rapidly approaching. So are there any things that we need to go ahead and get started on now so we know that we have done what we need to do by the end of the year, which is probably going to be by the time I turn around after the show, it seems like.
Yeah, time does move quick here, especially in the fourth quarter. And a couple of things to talk about, like we mentioned at the first show. Is there room for a Roth conversion for you? Have you taken your required minimum distribution if you're over the age of, let's say, 73? Okay, you can do qualified charitable distribution. So let's say your IRA account is, yeah, or your IRA required minimum distribution is $5,000. You don't need that money to live off of, and you can pay some or all of that to charity, satisfy your RMD. It's not taxable to you. It's not taxable to the charity. Call that a qualified charitable distribution, or a QCD if you're reading an article. And then you may want to look at rebalancing the portfolio after a significant run up. Is your 60% stock, 40% bond position still 60-40, or is it 70-30 because of the run up in the stock market? And then, do you want to make some, finalize your 401k contributions because you have the December 31st deadline for that? IRA contributions you can make until April 15th of the following year. So, yep, always a couple of things on the agenda there. You might want to look at, if you've got outside of an IRA account, do you have anything that, that didn't make money this year, like has losses? You can sell some of those losses and lock in some of that capital loss to offset future capital gains down the road. So call that capital tax loss harvesting.
It's funny, Chris. Recently, the AWS went down, and I was like, well, what does that mean? It affected a lot of things in technology. So I ended up having to go and look up what is AWS, Amazon Web Services. But as you're talking through some of those year-end to-do items, it kind of struck me like, inside the industry, we have jargon and acronyms. If you have an IRA and you need to do your RMDs, you should do a QCD. Like all of these things that we know talking about inside the industry, but outside, like not only do people maybe not know what they are, but certainly don't know how to execute on them. And this is, I think, one of the real values of working with an experienced, qualified professional is the things that might just pass us by as Main Street everyday investors doing what we need to do to work and earn and save and invest may not know the intricacies of some of the advantages and opportunities and requirements in the tax code, some of which have deadlines here at the end of the year.
Yeah, absolutely. And you need to be on the be on the heads up here. And you're right, we live in a world of acronyms, especially in the financial ETFs and ADRs, all of those good things, RIAs, IARs. It hits a minefield for sure. And that's why we do our college class. We really try to bring it down to the level of the average everyday consumer, not from the investment for professional side.
Yep. Well, again, things do have deadlines, ladies and gentlemen, and here where we are in the fall season, the end of the year is rapidly approaching. Chris, for those deadline items, the RMDs, the Roth conversions, the 401k, plus the catch-up contributions we might want to make, the tax loss harvesting, the charitable gifting, those things should not wait until December 30th. You've got to get a jump on them well ahead of time. I know, in fact, several of the financial institutions have deadlines well in advance to get the paperwork or request for those items in.
Yeah, absolutely. And you don't want to get into the IRS penalties, especially in the middle of a government shutdown. Who knows how long some of these things may take. And, my wife had to call the IRS the other day, and somebody actually answered the phone. So they are still functioning. And it was an address change. We moved an office, and they keep sending us things to the wrong address. And but with this government shutdown, is that going to add to some volatility of the stock market because we're not getting some of the financial statistics? And hopefully they get it done sooner rather than later. And we'll save that argument for another time at who's to blame.
Well, Chris, we always appreciate the time, the perspective, the knowledge, the experience that you have in the financial world, helping and benefiting listeners and viewers of the show to make sure that they are aware and educated, informed, and executing on sound strategy. So if you have questions or concerns, ladies and gentlemen, if you have your finances going and moving, but you want to double check and make sure that you've left no stone unturned and uncovered every potential obstacle in your way so you can navigate. Pick up the phone and give Chris McIntire a call. That is part of the service and part of the value of getting a plan put together, having that game plan, your game plan for retirement. And again, to get that process started, to have a plan in your hand, all you got to do is start by calling 419-332-0532. 419-332-0532, the number to call. You can also go online, McIntireRetirementServices.com. Lots of excellent resources available online there, McIntireRetirementServices.com. And while you're here, if you're on the podcast viewing or listening, like, subscribe, share, leave a comment. We love the interaction, and we can answer questions if you have them. So go ahead and do that now. Like, subscribe, share. If you are listening on the radio, we do have a podcast archive of these programs that is available there at McIntireRetirementServices.com. And Chris, you just try to make these resources available so that people can make better, more informed decisions with their money.
Absolutely. Information is the key to making the best decision that you can given your particular situation.
Well, we appreciate the time and the information, Chris, and I enjoyed the Halloween candy analogy for retirement planning. I've heard we've talked about this before, but every time it strikes me of just how good of an analogy that really is. So appreciate the time and sharing with us.
Yep, and I'm going to make sure Robin doesn't invade the withdrawal rate too much.
Indeed. All right. Well, Chris, you have a great week. Thank you for being here as our resource on your game plan for retirement.
Tune into Chris McIntire's full radio program and visit McIntireRetirementServices.com for many additional valuable resources, including other great episodes of Game Plan for Retirement with Chris McIntire. Be sure to subscribe.
The content of this radio show is provided for informational purposes only and is not a solicitation or recommendation of any investment strategy. You are encouraged to seek investment, tax, or legal advice from an independent professional advisor. Any investments and/or investment strategies mentioned involve risk, including the possible loss of principal. Advisory services offered through Brookstone Capital Management, a registered investment advisor.
Fiduciary duty extends solely to investment advisory advice and does not extend to other activities such as insurance or broker-dealer services. Advisory clients are charged a quarterly fee for assets under management, while insurance products pay a commission, which may result in a conflict of interest regarding compensation.